Well, if you look at northbound statistics, we have seen quite significant selling from international investors on Chinese equities really since August. I think that reflects a couple of things. Number one, the continued worries regarding the housing market in China, and number two, obviously the expectation on policy easing. I would say the starting point was quite high, and so far the authorities have adopted a relatively piecemeal approach in terms of announcing and implementing policies. So I think that turned out to be a little bit disappointing to equity investors. So that's why we've seen the selling. But having said all this, year to date, you're still talking about $19 billion of northbound net buying. And if you compare that number to what we had in 2022, which was about $13 billion. So on a year-on-year basis, we're still talking about incremental inflows into Chinese stocks.
Incremental, do you think that they could turn out to be a tactical move right now on part of investors who are searching for value, especially in the last quarter of this financial year?
Yes, we do. So we think on a tactical basis, the market will likely operate in a trading range. But given where we are on valuation sentiment, I think we are probably closer to the sort of lower end of the range. And given our expectation that the economic growth momentum will likely improve in the remaining months of the year, we think there's a potential for the market to do better going into the year end.